Being an entrepreneur isn't a solo sport. You can't just play it by yourself and expect to get really huge gains. One of the things that I told my students at the beginning of every semester was that, hey, 90 some odd percent of every startup, venture-backed startup fails. Those are the kinds of waters that you're operating in. You have to be exceptional. And just because an investor says no, that doesn't really mean anything necessarily. You can go online and find some of the biggest businesses that had to pitch to 100 different investors before they found one that would actually take a chance on them. There's more money coming into the early stage companies. As long as AI continues to advance at any level, I think that most of the bigger money is going to continue to go into that and to everything that is adjacent to it as well. If you are willing to lose a few $100,000 investing in startups, then that's something that you can seriously consider. Otherwise, it's a really tough space to do well in. And there's a few people who do really well in it, and they are rock stars, and you all know who they are. But most of the startup investors you probably never heard of, and you probably never will.
Hey, what's going on, family and friends? Welcome back to another exclusive production. Today's guest is an entrepreneur, investor, and educator who's been shaping the startup ecosystem for nearly a decade. Meet Travis Lindsay, co-founder of Titan Angels, a Southern California-based seed investment fund empowering early-stage founders with not just capital, but mentorship, strategy, and a network of industry pros. I personally and recently have had the privilege of attending a Titan Angels pitch, and during the pitch, I noticed that the Titan Angels community gets some of the same deal flow as various angel investor communities that I've participated in the past, like Keiretsu Forum. So it's a small world in the private capital markets. Anyways, back to Travis. He's a leader at Cal State Fullerton Startup Incubator. Travis has helped countless entrepreneurs navigate the high-stakes world of venture funding, and he brings a wealth of real-world insights on what it takes to build, scale, and win. In this interview, we dive deep into the art of early-stage investing, what makes a founder truly coachable, the red flags investors should be looking for, and why building the right network could be your greatest competitive advantage. So whether you're a founder looking to raise capital or an investor scouting your next big opportunity, this conversation is loaded with value. So let's get into it. Let's roll the tape to my interview with Travis Lindsay. Thanks for tuning in. Love you mucho. What's going on, family and friends? We're back with another exclusive production. Today, we've got an entrepreneur and visionary that's well connected at my alma mater. That's the California State University of Fullerton. His name is Travis Lindsay. Let's bring him up onto the stage. Boom, there he is. Meet Travis Lindsay, a startup advisor, investor, and educator dedicated to empowering founders and bridging the gap between education and entrepreneurship. As co-founder of Titan Angels, a seed investment fund based here in Orange County, and a leader at Cal State Fullerton Startup Incubator, Travis mentors startups, drives innovation, and supports early-stage ventures with strategic insight and investment. Travis is basically a living legend. How you doing, Travis? Did I miss anything? Feel free to give yourself a quick pitch so the audience knows exactly who you are and why it's important to be paying attention.
No, Ray, I don't think you missed anything. If anything, if you're looking for more work, I could hire you as my hype man. I think that would be a great.
That's what I'm here for.
Yeah. So I'm the visionary. I'm getting older now. I just turned 40 within the last, month and a half.
Oh, happy birthday.
My vision, thank you. So my vision actually isn't as good as it used to be, but you're right. I was at Cal State Fullerton, mostly on the administrative side for about a decade, all in entrepreneurship. While there, I helped found the CSUF Startup Incubator, which is still going strong to this day. I also taught for a couple of years, started right before COVID hit, and taught entrepreneurship, leadership, and also the capstone course at the MBA level. About 4 years ago now, I moved out to right outside of Austin, Texas. And I'm still one of the co-founders of Titan Angels. We founded that about 8 years ago. And along with, I think you've interviewed him before, John Bradley Jackson, JJ, to all of his thousands of students and friends. And yeah, we're just going strong with all that.
I love to hear that. Professor John Bradley Jackson, shout out to him, but he may have had thousands of students, but I'm sure that you and I were his top favorite.
Oh, definitely. Definitely.
Hey, let's shift gears here and take advantage of the time that we have together and dive into all things that are Titan Angels, if you don't mind. For me, that's intriguing coming from my background at Link2, where we invested into the private capital markets underpinned by special purpose vehicles. There's a lot of things that I thought were new to me that were fascinating in the world of investment. So thinking about Titan Angels, which is, I believe it's connected at an arm's distance away from the entrepreneurship program, which for me, it's beautiful. The synergies and complementary between the Cal State Fullerton entrepreneurship and this basically venture fund program is a brilliant marriage. Do you mind talking about what Titan Angels is for those in the audience, why you were passionate enough to found this investment endeavor, and we'll go from there.
Yeah, about 8 years ago, JJ, the original director for the Center of My Games, and a few others, including myself, were looking around at all the different startups that we knew and worked with. And we saw that they really weren't getting a lot of funding, even back then. And so we decided, hey, let's find this really super early stage fund. We did that for the first fund. We ran that for about 5-6 years actively. Is still going. We still have portfolio companies that are there that are still growing, still bringing on more capital, hopefully getting to an exit. And we have our second fund that we're still actively managing. Between the two funds, we have about 30 different investors, and we made about 30 different investments, as you saw on the screen right there. And our fund is a little bit different. We do invest as a fund. So the investors become our members and they invest in us. And then we turn around, do due diligence, find all the different startups that are interesting, bring them into everybody, build some consensus over which ones we should invest in, and then move forward. Our investment size is usually in the 25 to 50K range. Although with that being said, there have been a number of situations where companies that Titan Angels has invested in, one of our members will do a sidecar investment and they'll invest 20 or even low six figures into that company as well.
Okay.
So it's been a really interesting experience. I've learned a lot. When we first started out, I don't think many of us even knew what a safe was. Hey, we're learning. But what I think that we bring to the table that maybe some other investors don't is that we're a larger group. We all have a ton of experience and it's across a broad range of industries. And so we really look to invest in companies that are coachable and that we can add value to beyond just the investment that we make. And just maybe a small point of clarification, Titan Angels isn't directly or officially in any way connected with Cal State Fullerton.
Oh, okay.
It's just that the people who founded it, we all met each other through Cal State Fullerton.
Oh, okay. I appreciate that, Travis.
No
So
worries.
apologies for overstepping or making that jump into conclusions. I see a lot of brilliant minds in both camps, in the same brilliant minds. And so for me, it's just, I appreciate just to see you guys very active, not only in the entrepreneurship program at Cal State Fullerton, but apparently in your own venture with Titan Angels. Apologies. But shifting gears here, how does Titan Angels differentiate itself from the traditional angel networks that you see from, what would there be?
Like a Tech Coast Angels or some other
Angels
group like
List, Kuritsu, and others. How do you guys differentiate yourself in the market?
I think the biggest differentiator for us is that we do invest as a fund. So our investors come in and they've invested in the fund, and then the fund will turn around and whichever companies we deem are a fit, both for us and for the company, then we invest in them as the fund. Like I was saying earlier, some of our members will add on and do sidecar investments, but that is a critical difference. And I think one of the bigger benefits of working with us, having us as an investor, is that you get 30 informal advisors if you want them when we invest in your company. So if you have a question or dealing with something in real estate or in fundraising or in marketing or whatever the case may be, you can come to us and then we could turn around and go to our members and say, hey, does anybody have any insight on this? And more often than not, he does. And we're able to go back and help.
What an interesting approach to this model as well, is giving back to the startups, not just providing the capital, but the mentorship and the guidance that the community, your community, Titan Angels, provides. I think that is in my world, or at least this new and I would call it emerging Web3 world where it's very community driven. I think that's very running. You guys were ahead of the curve is where I'm getting at. So kudos to you guys.
Yeah, we are in entrepreneurship. We're immersed in it as consultants, as educators, then as investors. I'm getting or going close to a decade now. So we were aware of what other like the gold standards do in the
Mm,
investing space, like Y Combinator and stuff like that. And
yeah,
we're not Y Combinator. We don't have the resources financially or
not yet.
experiential. Yeah, not yet. Exactly. Yeah, give us a little more time. But yeah, like a Y Combinator or like a Techstars, the money behind those is a lot higher. And then you also have a lot more expertise specifically in the stuff that they're investing in, which is all Techstars, so tech. And the other thing that we help with is also the network. And that's what I think any good investor or investing group or association or however it's set up helps with. Because as being an entrepreneur isn't a solo sport, you can't just play it by yourself and expect to get really huge gains. You need to have that large network of people that you can go to and rely on. And
Absolutely.
it's not necessarily the people that you know the best. It's those second order and third order connections that sometimes make the biggest difference in your business.
Said, and what we get out of when we're working as a community is so much more than working, as you mentioned, as an individual. And for me, in this entrepreneurial journey, working specifically in this technology or fintech sector, there's so many moving parts, and especially when these ecosystems are now global, you really have to trust your network, and that takes time. Though, kudos to you guys for, again, just being ahead of the curve. And hey, I'd like to talk about a couple things while I have your attention, Travis. For me, it's it's a balancing act when deploying capital into any early stage startup. There's just, you have to know the fundamentals. And with that being said, what do you guys typically look for in regards to the fundamentals when or before deploying any capital into any specific startup? Is it you mentioned coachability, so the team, I'm sure the technology. What other things are you guys mindful of before deploying any capital?
Yeah, it's not any one thing in particular, right? So
Yeah.
it's definitely the team. We're not investing in a single person. So if you have a tech startup that is building some sort of medical device, do you have the key players on the team, on the executive team that can help pull that off? Maybe at the start, it could focus more on just the R&D side of it. You're
Mhm.
developing the technology, you're figuring out whether or not it's going to work. But then also it has to be a well-rounded team. You have to have the business expertise on there as well. And it's not necessarily that everybody has to be an executive with a specific title. If you have a good stable of advisors that are working with you, that's a huge indicator for us as well. So like I was saying earlier, we invest really early stage, so it's always a work in progress and they're figuring things out. Some of the investments have been pre-seed, right? So
Yeah.
they're only raising a couple $100,000 and they really don't know a lot, but they have cool technology and they have a market that we think is expanding and is worth getting into. The founder and the founding team really are coachable. They're open to advice. It may not even have to be from us, but from their advisors. So we'll talk with the advisors and see how good the founders are at listening and taking advice. And it doesn't necessarily mean that you have to do everything the advisor says, but listen to it and factor it into whatever your decision is at the end of the day. Beyond that, how scalable is the technology, right? So there's a lot of businesses out there that may be great and they could make a good amount of money, but not for investors usually, at least not the kind that we are. So we're looking for companies that can go from a valuation of, let's say, $5 or $10 million at the start and hopefully get over $100 million feasibly or realistically, I guess I should say. And so that's something else that we look at. And then another big one is there's a few more big ones, but I'll just go
Give us the big
with
ones, Travis.
they're all big ones, right? Everything is important.
When you're talking about a 10x, they're all big.
Yeah. No, yeah, that's absolutely right. One of the things that I told my students at the beginning of every semester was that, hey, 90 some odd percent of every startup, venture backed startup fails. So those are the kinds of waters that you're operating in. You have to be exceptional. So everything, yeah, it is important. So timing is also important, right? There was a lot less investment going on, especially at the lower levels about 4 years ago because of COVID. So that's an issue. And yeah, I think that those are the big ones. So like timing, team, coachability, the ability to scale, those are
Yeah.
some of the big things
Yeah.
that we're really looking at.
Said, and I completely understood when you say timing. That hits me in a couple different ways. Timing as getting into the opportunity as if you were riding a wave. Are you in front of the wave? Are you on it? Are you behind? Did you miss it? And then timing from a time horizon. How long do you want your capital working? How long can you afford to have it working? And being mindful of just I would call it like a waterfall effect from all your investments. When are they going to start paying out? And then so you can redeploy that capital and work it. So there's, for me, timing means a lot, but I appreciate how you framed it. If you don't mind talking about in timing, in regards to timing again, is the investment life cycle. Can you break down the full life cycle of the Titan fund? I know you have two funds. Would you be able to discuss the investment life cycle?
Right. Yeah. Yeah. Like I was saying earlier, we invest early stage, sometimes even pre-seed. So it's super early. And the industry standard, at least from my knowledge, is that those companies usually take about 7 to 10 years
Mm.
to get to a point where they can get to an exit. So we're still waiting, in other words, before we actually have a huge exit. And that's fine. I knew that going into it. These things do take time, especially how early we were investing in these companies. So that's just part of it. But like for our companies to get the investment from us, and one thing a lot of founders maybe don't realize before starting is that your full-time job, or at least one of your full-time jobs, is going to be raising money for the duration. So you have to spend a lot of time finding those first investors. Frequently it's family and friends. And so that's how you start building out your network, at least that part of your network. And then you start bringing on outside investors. So Titan Angels could be one of your first 5 or 10 investors in your company that you haven't spent a birthday with before. And beyond that, it depends on what kind of company you're trying to build. If you're trying to become a unicorn, then yeah, you're going to have to raise multiple more rounds usually. There are, of course, exceptions. And a lot of the ones in the news, they're started by people who have already gone through the whole startup process before, and they're starting something new, and they have a really specific set of skills or product or a killer team where they can raise $50 million in the first round. Those aren't the waters that we play in. But for our companies, yeah, usually it'll take a few more rounds of investment, at least a couple more. So Series A, Series B, so on and so forth. And
Well,
then
that means you're confident and bullish on your investments. I love to
yeah,
hear that.
yeah, so there's definitely some of them, from going back to that death rate that we were talking about earlier, 90+%. We're ahead of the curve on that. It's still early stage or early days for us. And we could find out that of the 30 companies that we invested in, we're not going to make much of any money out of it. And I don't remember exactly now. So this is just from my faulty memory. Again, I just turned 40. I'm older now and my memory's going. But I thought I saw some studies that showed that the majority of funds end up making like $0 or less.
Let's hopefully turn that around with this next wave that we're hearing about. And maybe one of those is within the Titan Angel funds, number 1 or 2.
Could be.
I'm always optimistic. So let's live there, Travis.
Yeah. Oh yeah. No. Yeah. You have to be optimistic in this business. I think it's good to be realistic and optimistic. So you know what you're getting into, but you get into it anyways.
Since launching your funds 1 and 2, is there any, aside from the turbulence of, or the questions of when's the liquidity event, have there been any other learning lessons along the way on maybe how to approach a fund or how to discuss things with your community? Just what are some learning lessons that have stood out along your journey at Titan Angels?
Yeah. And I think that learning all the time is something that really should be a critical part of every entrepreneur's journey, because there's always new things happening and things are changing much quicker now than they ever have before. The economy is going to be significantly different 5 years from now than it was 5 years ago from now, or from today, what was a really different place. Specific learnings, one of the big ones is about that scalability. So when we first started out, some of our early, like first 4 or 5 investments, and not all of them, like 1 or 2 of them, they may have been into companies that really didn't have that ability to scale as much as you really need for an investment fund. One of the things that we learned and knew before we got into this and was really reinforced afterwards was coachability. So being able to stay in touch, ask questions, get the answers that you need is something that is really critical for startup founders because there are a lot more unknown unknowns in any kind of large business than any founder could be expected to have or expected to know. And that goes less for the experienced ones, the ones who have maybe sold multiple businesses in the past and are doing their 5th or 6th one. But there's still new things that come up. And like we were just talking about, things change. So being able to go out and ask those questions is really important.
When you mention on some of those seasoned founders, it's you can't teach a dog new tricks, or maybe they've just become complacent or just are good with what they've got and think that, hey, we've now earned the street cred where we can potentially outsource those things early on, which I think the signs of a great founder is someone that has done almost all the roles within the organization, because then they know that organization inside and out and can appreciate an entrepreneur and founder that rolls his sleeves up and gets in the trenches and is right alongside just
Right.
his team. But
Yeah.
before I do, I know that your time is very valuable, Travis. You've got a very important meeting following this call, so I don't want to take too much of your time. But I do want to, again, see some very important questions that were burning inside of me. And with that being said, what are some red flags that you look out for when working with these new ventures? So on the opposite end of being coachable is someone that's a wild card, is shooting from the hip and things of that nature, or someone that doesn't have systems in place. What are some friction points that really stick out to you, or that you think that my audience would really appreciate hearing?
Yeah, a really simple low level one is, do people respond to emails or calls? And if they don't, then okay, we have more deal flow than we can handle, that you just go into the dustbin. And it's helpful. It actually does screen out a good deal of potential startups that we don't have to end up spending hours and hours with. So that's one of them. One of the things, and this kind of goes back to the learning as well, there's a tendency for really technical founders to focus on the technical aspects of things and during like pitches. And it really depends on the kind of investor that you're before. Some of them expect that and want that, but it doesn't usually play as well with us. There should be some sort of a blend. If you look at our portfolio, we were founded in Southern California, so there's a lot of med tech there. So it's not that we are against technology, quite the opposite. It's just that you're pitching us a business. It's not just the technology. And so, giving equal time to both is a must.
Yeah.
Yeah. And
I think that's well said. For me, especially, you got to practice that inside and out. And then in addition to just confidence, I think confidence is so we get in our own head at times, stumble on our own words, even when we know those words inside and out. And again,
yeah, you're absolutely right. Confidence definitely does help. If you have a good stage presence, that certainly does help. And just because an investor says no, that doesn't really mean anything necessarily, right? You could go online and find some of the biggest businesses that had to pitch to 100 different investors before they found one that would actually take a chance on them. It could mean anything really. So it could just mean that you're not the right fit for the investor. Maybe you had a bad day. Maybe they had a bad day. Maybe they're short on cash and they're not really ready to invest at that moment, or whatever the case may be. So yeah, as far as practicing, definitely practice. And the actual pitches that you make to investors, treat them super seriously, but that's also practice. It's just reps. You have to get in as many reps as you possibly can. And even if you don't get that investment, you've gained another node in your network that you could use for something else. And follow up, ask questions, say, hey, what didn't work? Do you have anybody else to recommend us to that might be a fit for us? So yeah. And then what you said about knowing your business inside and out, I think is absolutely perfect. You need to know everything, right? It's not possible, but that should be the aim. So not just about your business, how you're manufacturing what you're manufacturing or how you're going to do R&D, but also about your competitors and about the industry that you're in as well. So the more that you know, that will show well with investors, no matter who the investor is, and that will impress them, I think.
Yeah. Piggybacking off that comment, Travis, about knowing your business, coming off the heels of Link2, and also with the recent interview that I've done for those that are tuning in, I recently interviewed Titan alumni, Adam Lavoie, who I met at the entrepreneurship event at Cal State Fullerton last month. But what we were talking about, since he's a very seasoned veteran in direct-to-consumer brands, which basically Link2, and if you zoom out and look at Link2 as a direct-to-consumer platform where we were essentially selling SPVs to a broad audience of everyday investors. And where I'm getting at with is just, so not only knowing the business, but knowing the global landscape, the regulatory landscape. There's just so much going on in this world that's being underpinned by tech, which I'm sure you and your portfolio companies are very well in tuned of. I just want to say, Travis, thank you for sharing your time with me. And on behalf of those that are tuning in today, and selfishly, how do we become a member, not just as an investor, but even asking for those that are operating a startup and would potentially like to discuss investment opportunities with you?
Anybody can reach out to me. I guess you'll supply my email address in the description.
Yes.
TravisBLindsay@gmail.com. That's just the simplest way to do it. To become a member in Titan Angels, there is a process. It requires a life sacrifice, and no, you have to be an accredited investor. So forget what the specifics are for that, but you need to have that, and then just reach out to us. I think all of our members have been in our network for quite some time, although not all. But yeah, reach out and talk with me, and I'll be happy to talk with you. Maybe Titan Angels isn't the right fit for you, but there's some other group that would be a better fit, and I could potentially point you in the right direction. Beyond that, if you just want to get involved in more startup stuff, there's stuff going on all over the place. Ray, I know that you have a ton of things going on.
Oh, yeah.
Cal State Fullerton does. They just got a new director for their Center for Entrepreneurship. Now it's the Connery Center for Entrepreneurship. So there's going to be a lot of activity going on there. And I know that they use mentors and have judges all the time, like hundreds a year. There's tons of different opportunities. And then there's tons of different organizations to become part of. And just start doing that, start building out the network.
Oh, said Travis. And for those in the audience that are watching, I did flash up the QR code to scan, and it'll take you directly to the Titan Angels website. Travis, I appreciate you sharing your time with me. Yes, within this world of investment, there's so many opportunities. There's so many moving parts where we have to do our own research and due diligence. And then for those that want to participate and are accredited investors, coming off the heels of my previous employer, having to know those accredited investor requirements inside and out, I'm hopeful they even change. I feel like we're on the cusp of seeing something radical that might either evolve the current accredited investor requirements or at least create new swim lanes, maybe a test, who knows? But right now, as they stand, the accredited investor requirements do define there's a multi-pronged way to satisfy the accredited investor requirements. You either have $1 million in liquid capital or $1 million in liquid capital, excluding or investments, excluding your primary residence. So it could be your real estate. You make a annual income of $200,000 or a combined, so a household income of $300,000, or you have a letter from your financial advisor stating that you satisfy the accredited investor requirements. And so there's a few different ways I believe you have a Series 63 or a Series 7. So there's accreditations that you can also achieve to satisfy the accredited investor requirements. But so for those, if there's a will, there's a way. And me personally, Travis, I'm excited. I really do. I'd like to participate within the Titan Angels community. When I do come into the money, I feel like I'm personally a little illiquid right now as I've deployed my capital across a broad range of portfolio companies across Link2's platforms. But when I see some returns, because Circle Internet Financial was one of them, that was a company that just recently IPO'd. That's where I'm looking to have some money to deploy. So with that being said, I will be circling back with you much sooner rather than later.
Ray, you sound like the normal overextended entrepreneur trying to do everything and all at the same time. So you are.
When do we eat, Travis? When do we eat?
Oh, that's not me. So I just eat normal people time. I don't know when you eat, but and
Uh, I'm starving over here is what I'm saying. But hey, before I do let you go, I would actually love to get a forward-looking statement from you on, you did mention the economy is going to look a little bit different 5 years from now as it does 5 years prior. What's your outlook on the current seed stage landscape? So maybe also touching in technology space, fintech, blockchain, Web3, finance. What do you think the world looks like in 5 years, if you don't mind me asking?
if you'd asked me 6 years ago, there's no way I would have predicted COVID. Take this with a grain of salt. What I can tell you is that I had a conversation within the last week or two with the Tiny Angels manager, John Bradley Jackson, JJ, and we have noticed a significant uptick in deal flow at our level. So there's more money coming into the early stage companies. My guess is that there's going to continue to be, as long as AI continues to advance at any level. I think that most of the bigger money is going to continue to go into that and to everything that is adjacent to it as well. So there's going to be a lot in there. I remember this is probably 7, 8 years ago. One of our first investments was in an AI company. And especially those first few years up until about the last couple, really, most of the AI companies weren't really AI. They just said it's a good marketing term to put in there. But that's definitely changed now. And I think that AI, AGI, whatever you want to call it, you were talking about Adam Lavoie earlier. I interviewed him for Center for Entrepreneurship, the Connery Center for Entrepreneurship, a couple months ago. And we talked a lot about that. It's really hard to predict. This isn't investment advice, but look at your portfolio, figure out what you're willing to lose. And if you are willing to lose a few $100,000 investing in startups, then that's something that you can seriously consider. Otherwise, it's a really tough space to do well in. And there's a few people who do really well in it, and they are rock stars, and you all know who they are. But most of the startup investors you probably never heard of, and you probably never will. But it's a really cool ride. You learn a lot, you make a lot of new friends, and it's been fun.
Someone told me that most of the Forbes under 40 or those that are on the Forbes list are typically in the private equity space, and you'll never hear about them. They're very quiet. Their name pops up there every once in a while. And so it's a different way for me. It's shoot, man, I'm a guy that's so public facing, trying to elevate my brand, my personal brand. And so is that contradicting to what a typical private equity investor does? Am I being too public at times? And so for me, there's so many questions that I ask because, like you mentioned earlier, there's just things are evolving so fast from the platform that I'm using right now, StreamYard, to the social platforms that it'll be broadcasted across. Just doing this on our own without any intermediary or real production muscle is revolutionary in itself. And so there's just a lot going on for many industries. And yes, you mentioned it's pretty much underpinned by AI. But anyways, Travis, I appreciate you sharing your time with me. I'll be sure to copy the links to Titan Angels, to your LinkedIn in the description and comments of this video below. So for those that are interested, not only can they scan the QR code that I'll flash up on the screen here right now, but also they can tap the links as mentioned, the description or comments below. I look forward to having you back on the channel much sooner rather than later. But more importantly, I'm looking forward to participating in the Titan Angels community. I'm also going to be mentoring in the entrepreneurship program this year.
Awesome.
I'm drawing a blank on the gentleman's name, but he's now doing the same class that Professor Jackson had taught last year. He's going to be using the same syllabus, he said, just for streamlining the process. But I'm looking forward to showing up every Tuesday this upcoming semester and supporting the next wave of entrepreneurs. Because for me, that was one of the most impactful moments and experiences in my educational journey and the beginning of my entrepreneurial journey. Just want to say thanks, Travis.
And I'll stop you right there for a second, because sure. I think that is a critical thing for anybody who's an entrepreneur or an investor or watching this in general. Give back. There are a ton of programs that are all over the place, or it doesn't even have to be becoming a mentor in the classroom for Cal State Fullerton or USC or whoever. You could just have a cup of coffee with somebody and help them. that is a great way to start building out your network or increase it or help them build their network out. And it's rewarding in and of itself. And usually good things happen beyond that. That's a great thing that you're doing, Ray.
I appreciate that. And Travis, for me, it's one way that I think that I can actually afford to give back right now, as being as illiquid as I said. But for me, I think that was one of the most impactful moments. And so if I could channel my energy in that in fashion, I will continue to do so as long as I can. But anyways, hey, I'll circle back with you off camera following this so I can become a Titan Angels much sooner rather than later. I appreciate you for hopping on. Please share my hellos and say hi to Professor John Bradley Jackson for me when you talk to him. And I'll get out of your hair. Hope you have a great rest of your day, Travis.
Will do. Thank you very much, Ray. Really enjoyed it.
Thank you, sir. Talk soon.